Welcome to the deep dive. We're jumping straight in today, really getting into the thick of Bitcoin and cryptocurrency. You've sent us a fantastic mix of sources this week. We've got Bitcoin Magazine, A Invest, Cointelegraph's Hodler's Digest, TradingView, cryptocurrency, of course, Inside Climate News, gov.uk, CryptoSlate, Cybercrime Magazine, and Market Pulse. So our mission really is to pull all this together, find the most important bits, and connect the dots for you clearly.
Absolutely. And it's a great spread this week.
Mm.
Really covers the whole spectrum, doesn't it? We're seeing big price moves, loads of institutional interest, but also like the technical deep dives, regulatory stuff, and that ongoing environmental debate around mining.
Exactly. We want you to get the crucial insights, maybe uncover a few surprises, but definitely not feel overwhelmed. Okay, let's kick off with the big one. Bitcoin's price, it shot past $100,000, hitting what? $103,000, $104,000. What's really pushing this?
Yeah, the sources are pretty much all pointing towards a big uptick in interest from institutions and even sovereign players. Invest mentioned that 7.91% weekly jump and tied it directly to this demand. Bitcoin Magazine said the same, basically climbed to 104K, fueled by institutional cash, and importantly, record ETF action.
Okay, let's talk ETFs for a second. BlackRock's IBET keeps popping up. For anyone maybe less familiar, what is a Bitcoin ETF and why are these inflows such a big deal?
Right, good question. So an ETF exchange-traded fund, it basically lets people invest in Bitcoin through traditional stock exchanges without needing to buy and hold the actual crypto themselves. It makes it way easier for big institutions, pension funds, that kind of thing. And these huge inflows, like A Invest noted, over $1 billion into IBIT just last week. Well, that shows serious conviction, big money moving in. That naturally pushes up demand and, well, the price.
And it's not just Wall Street, right? We're hearing about actual countries getting interested, the UAE potentially buying Bitcoin for reserves. That feels
Yeah.
significant.
Oh, absolutely. Michael Buchella from Neoclassic Capital quoted in A Invest, he stressed how Bitcoin's becoming, part of the bigger macro picture. And the UAE news, if true, really highlights that shift. Rafad Mahasna at OKX EMEA added that major sovereign wealth funds are looking into crypto now within regulated setups. It suggests Bitcoin's kind of graduating into a more accepted global asset.
So big finance, maybe even nations buying in. Clear
Yeah.
driver for the price surge. And then there's Stake and Shake starting Bitcoin payments next week. Interesting.
Yeah, it is. It's more of a ground level adoption sign, right? Bitcoin moving beyond just being an investment. Maybe not a huge price mover on its own, but it adds to the overall awareness, the normalization.
Okay, now the analysis. This is where it gets interesting. Price is up, but the chart watchers are talking. TradingView mentioned Bitcoin needing to close the week above what, $104,500 roughly to maybe kick off price discovery 2? What does price discovery actually mean here? And why phase 2?
So price discovery is just that period when an asset like Bitcoin pushes past its old all-time highs. It's finding a new price level, basically, without old resistance points holding it back. Think of the big rallies before. Those were price discovery. Rect Capital on TradingView suggests closing above that $104.05K level could signal a new phase of moving upwards, maybe faster, maybe different volatility, we don't know yet, hence maybe phase 2.
And some are throwing out really big numbers if this holds. Hodler's Digest mentioned someone targeting $160,000.
Yeah, Matthew Hyland, an analyst code Awning Telegraph, mentioned he suggested if the trend stays bullish and indicators like the RSI support it, we could see, well, quite a bit more upside. 160K was his figure.
But it's crypto, there's always the but. TradingView also flagged warnings, fakeouts, pullbacks. How do you square the optimism with that risk?
You absolutely have to. No market goes straight up. HTLNL, a trader mentioned on TradingView, they warned this surge might be a fake out, right?
Right. Yeah.
Designed to pull people in before a drop. And El Capo of crypto apparently warned of a big correction too. It just hammers home that you need risk management, can't get swept up.
Right. And Rect Capital also reckons the bull market is, what, 85.5% done, but still expects maybe erratic upswings. Sounds like a bumpy ride, even if it trends up. They also said liquidity is bunched up around where we are now, and the next fight might be around $106,000.
Exactly. Those liquidity clusters, they're basically price levels with lots of buy and sell orders waiting. So yeah, they become battlegrounds, potential turning points for the price.
Okay, let's shift focus a bit. Canada Crypto Week. Market Pulse flagged this as maybe boosting interest in the wider crypto scene. What was the vibe there?
Yeah, Canada Crypto Week in Toronto. It brought together folks from blockchain, Web3, decentralized AI. Market Pulse felt it injected some fresh optimism. A key thing seemed to be Vitalik Buterin, Ethereum's co-founder, stressing that crypto needs to solve real problems for the next adoption wave. That focus on actual utility, moving beyond just speculation, Feels like a sign of the industry maturing, maybe.
And speaking of Ethereum, the Pectra upgrade went live May 7th. Sounds like it helped cut transaction costs on layer 2s. Can you break down layer 2s and why that matters?
Sure, layer twos are like express lanes built on top of Ethereum. They handle transactions faster and cheaper than the main network. Market Pulse reported Pectra did indeed lower fees, significantly in some cases, like up to 40% on some rollups. They do this by adding more storage for these layer 2 transactions and letting people pay fees in stablecoins. Cheaper transactions make using Ethereum apps more attractive, right? So it boosts the whole ecosystem. Probably helped Ethereum's price too.
Gotcha. Okay. Regulation always looms large. Gov.uk mentioned draft legislation in the UK. What are they trying to achieve?
The UK's main aim seems to be boosting investor confidence, protecting consumers. They want to bring crypto exchanges, dealers, brokers, that sort of thing, into a proper regulatory framework. Think clearer rules, transparency, safeguards, similar to traditional finance. The Chancellor also mentioned talking with the US about responsible growth, so maybe some international coordination is happening.
And the US stance might be shifting too. This strategic Bitcoin reserve idea, holding on to seized crypto. What's the thinking there?
Market polls highlighted that. It could be a subtle but, yeah, significant shift. Instead of just selling seized Bitcoin immediately, treating it as strategic reserve kind of acknowledges its potential long-term value. It's less dismissive, could maybe pave the way for a more thoughtful, perhaps even supportive regulatory view down the line.
All right, let's dig into something less glamorous but really important. Bitcoin mining's environmental impact. Inside Climate News had a pretty concerning piece on New York.
Yeah, that report laid out how these big mining operations in New York use huge amounts of power and water, plus noise, greenhouse gases. What's particularly worrying is this trend of miners buying up old, sometimes decommissioned power plants to run their rigs. That often means firing them back up, increasing emissions, and, well, upsetting local communities quite a bit.
And it sounds like those communities are fighting back. Local laws, moratoriums, lawsuits. One town banned mining for 2 years.
Definitely. The main complaints are noise, the environmental hit from restarting or ramping up these often older gas plants, and concerns about water usage. The article really painted a picture of towns feeling kind of blindsided and worried about the impact on their environment and quality of life.
The water usage thing feels like a big one, maybe less talked about. Inside Climate News threw out some pretty big global numbers.
Yeah, the potential water footprint is substantial. And it's not just consumption, but also potential thermal pollution if heated water is discharged back into lakes, like the concern mentioned with Seneca Lake and algal blooms. Plus, that Harvard study trying to trace air pollution back to mines, even seeing potential effects in NYC due to the grid demand, it shows the impact can spread far beyond the actual mine site.
Now, politically, President Trump has backed the crypto industry. How does that play into this environmental regulation discussion?
Well, given his administration's general approach to environmental rules, his support for crypto could mean less pressure for strict environmental controls on mining. Market Pulse also suggested potential conflicts of interest might slow down broader crypto policy development. It's definitely a complicated mix of politics, regulation, and environmental concerns.
Okay, unfortunately, where there's money, there's often crime. Cybercrime Magazine and Hodler's Digest had some grim updates. Celsius CEO getting 12 years for fraud, that's serious.
It certainly sends a message, doesn't it? Hodler's Digest pointed out, the sentence length suggests authorities are serious about accountability for crypto-related financial crime.
And then there was that huge leak of Bitcoin addresses tied to the Lockbit ransomware gang after they got hacked. Plus, reports of Coinbase users losing big money to social engineering scams. Security is still a huge issue.
Absolutely. The Lockbit leak might help law enforcement, but it also shows how vulnerable even these criminal groups can be. And the Coinbase scams are really worrying. It highlights that it's not just about platform security. Users need to be incredibly vigilant about social engineering tactics, too.
Then there was that bizarre story about the Zerebro developer's death being questioned. Speculation it was faked, and CryptoSlate reporting journalists found him alive. What even is that?
Yeah, that's a very strange one. It raises a lot of questions about what was really going on there, potential motives, definitely erodes trust. The full picture seems unclear.
And finally, a suspected North Korean operative trying to get freelance crypto work. Shows even state actors might be trying to infiltrate. Interesting, too, that BlackRock added more detail on quantum computing risks to their ETF filing, thinking way ahead about security threats.
It really paints a picture of the diverse security challenges, doesn't it? From individual scams right up to potential state-level threats and future tech risks like quantum computing.
Okay, last stop. Reddit's part cryptocurrency. Always a good place to gauge sentiment. Unsurprisingly, lots of chatter about Bitcoin hitting 104K, plus the usual memes. Anything else jump out?
Yeah, definitely saw talk about the U.S. government's crypto stash hitting over $21 billion, and El Salvador still buying more Bitcoin for its reserves. Also, interestingly, some analysis suggesting the Ethereum rally might have more room to run, maybe even outperform Bitcoin short term. So not everyone's focus is solely on Bitcoin.
But a bit of caution, too. Concerns about less dumb money flowing into altcoins this cycle. What's the thinking there?
Right. That reflects a worry that maybe retail investors are being a bit more careful this time around with smaller coins, perhaps after getting burned before. If that speculative retail money isn't as strong, it could mean altcoins don't see the same kind of explosive gains relative to Bitcoin, which is getting more of that institutional attention right now.
Okay, so wrapping this deep dive up, we've covered a lot of ground. What are the absolute key takeaways from this whirlwind week?
I'd say the big themes are, one, clear bullish momentum for Bitcoin, really pushed by that institutional and maybe sovereign interest. Two, important regulatory moves, especially the UK trying to build a framework and maybe a subtle shift in the US view. Three, ongoing tech progress, like Ethereum's Pectra upgrade making things cheaper. Four, the environmental debate around mining isn't going away. It's heating up in places like New York. And five, unfortunately, security and crypto crime remain constant background noise, or sometimes foreground noise.
And for you listening, why does keeping track of all this matter?
Well, understanding how these different threads, price, adoption, tech, regulation, environment, security, all connect, gives you that crucial big picture of crypto right now. Whether you're investing, just curious about the tech, or thinking about the wider impacts, these are the forces shaping things.
All right, let's leave you with a final thought to chew on. With all this institutional money pouring in and government stepping up regulation, how might this change the original decentralized spirit of crypto? Is this just mainstream adoption, a necessary step? Or could it dilute those core ideals that started the whole movement? Something to consider, that balance between growth and the founding principles as you keep exploring this space. Thanks for taking this deep dive with us.